just going to ask the panel all to introduce themselves briefly, and with the first question for the panel. How important do the panel consider data and data analytics in the industry today? Let's start with you, Caroline. Yes, let's start with you.
So Caroline Malcolm, I run the public policy team for Chainalysis. Needless to say, John, I think data is extremely important for the industry. We work across a lot of different kind of use cases for data, really starting life for Chainalysis, looking at the sort of investigation side, moving more into compliance, AML in particular. And now with what's happening both on the sort of regulatory side and just general government interest in this space, starting to think a little bit more about different uses for the data, things like, around market integrity, financial stability, and so forth. So how we can help support the sort of strong growth of the industry, both in terms of giving the regulators the data they need, but also help industry better understand sort of what's going on across the board.
Great. Vanessa?
Hi, my name is Vanessa Grelli. I'm the managing partner at Aglaé Venture. We're an early stage Web3 fund. I think, when you speak about data and data analytics, there's several audiences for that. There's obviously the traders, the regulators, but let's not forget the builders who need the data in order to build dApps and in order to automate their business processes. And so it ranges across the entire participants of the blockchain industry, and it's really the fuel for it to grow.
Thank you. Elodie?
Yes, thank you, John. Hi, everyone. Pleasure to meet you. My name is Elodie Demarchi, and I'm Chief Operating Officer at Kaiko. We do financial market data for crypto assets. In short, I completely agree. I mean, data today is more important than ever for a lot of different reasons. One of them being what we see, being the bridge between traditional finance and blockchain ecosystem is within the blockchain ecosystem, the smart contract will just consume the data directly and execute. So the quality of data, of that trusted information is more important than ever, not only to make sound investment decision, but also to fuel the blockchain ecosystem that will take directly the data and consume it.
Thank you very much.
Hi, everyone. My name is Neha Narula. I'm the director of the Digital Currency Initiative based out of the Media Lab at MIT. I think these are all really good answers. I think there's so many different angles from which to consider data and analytics in a blockchain-based ecosystem. But maybe one that people don't think about very often is the fact that these ecosystems are really invert data almost. So we're very used to situations where a company has access to a data source and it's closed, it's inside the walls of the company, no one else can access it. Maybe they do deals or they release it through an API, whereas in blockchain-based ecosystems in these decentralized networks, everything is out in the open. That's on-chain data, but that's also transactions in the peer-to-peer network. That's things that might be used to reorder transactions to get better execution. There's oracles that are inputting data. So there's a lot of really different aspects to think about it, which I hope we get to talk about in this panel.
Great. Thank you very much, Neha. That's great. Caroline, just kicking off with you, I mean, clearly one of the uses of data is tracking illicit and suspicious activity, which is something that you guys are heavily involved in. So how has this data and functionality allowed Chainalysis and companies like you to do this?
Yeah, so it's really interesting, and I think picks up a good point. There is a huge amount of data, but unlike most other industries, that data is, sort of de facto publicly available. So what we really do is kind of provide a map to help people understand the data and what's actually going on. So I like to think of it as it's a bit like having a Google map, but it's a Google map of a city without any street names on it or any names of the buildings that are on it. And what we do is we provide this overlay which allows you to understand where you are in that map of the city. But again, like continuing the analogy, it allows us to sort of go up to the Google Earth level and kind of see what's happening trend level, either globally or in a particular part of the world, and that's true when it comes to sort of illicit activity, understand sort of where it's taking place, where it's moving to, what types of activity, and then but really drilling down then to, if you're an exchange wanting to understand what sort of exposure you have to particular types of illicit activity, being able to provide you with that on any single transaction as well.
That's great. Elodie, from your perspective in terms of kind of market data and data analytics, I love that Google Street Map analogy. Actually, I might have to steal that and reuse it. So, what I know that's something that you look at, the market data side. Do you want to just build on what Caroline just said?
Yeah, absolutely. So the reference you made is really in more, the KYC AML level, which is more on the individual level. That's another thing that's extremely important for regulators, where any market participant, is to talk about the integrity of the market, to ensure that a market is fit and is proper. You need to look at market data to have this overview of the market. You need to look at, is there any wash trading happening? And for the regulatory bodies, basically, to be able to distinguish between what's a normal activity versus what's a fraudulent activity, you need able to have those KPIs and talk about the liquidity, for example, of the market. You need to look at what's the activity. For example, if we just look at the FTT and FTX situation, you would look at the market cap is not sufficient indication of the risk that you're taking in the market. So, for example, the market cap of FTT was 8 billion, but if you actually look at the organic liquidity, was only in the hundreds of millions. So you would have realized that basically it would take you weeks to be able to get out of that position. So you need to have market data to have a macro assessment of the market. I will also argue that you also need market data when you are a hedge fund, when you're investing and deploying capital into a market, to be able to look at your own in risk management, at your own risk strategies, to look at the value at risk, like how much are you going to lose. All of this is mathematics and statistics, but it's extremely important to understand what's your position from a risk perspective at that level too. So I would argue that market data is extremely important, micro level, what you mentioned, but also at the macro level and within your own deployment strategy.
So is the trick to combine them basically then?
Yes.
Good guess. Neha, in terms of the academics, the academic side and what you guys are doing at MIT Media Lab, how do you see the use of the data and the value it can bring?
Yeah, there have been some really interesting research projects that have come out of MIT broadly. In particular, there's an economist at MIT, Antoinette Shore, who has written some really great papers about the concentration of the market in Bitcoin. And she was able to write these papers because of the availability, the rich availability of on-chain data, the entire history of Bitcoin transactions. And so, using techniques from economics and using, her various sorts of models and formulas, she was able to apply them to this market in a way that I think would be very challenging in any other market. And so they have a very interesting paper about market concentration and liquidity in Bitcoin. I know they're looking at other chains as well. And then there have been some other papers that have, sort of made claims about these markets, but only looking at, a certain part of the data. And what's really interesting here is because all of this is public, because it's available to anyone, people can go and fact check these things immediately. And so it's really, I think, provided this very rich data source to derive learnings, which has been fascinating. I think something that's very interesting, I really liked Caroline's analogy about Google Maps, because though this data is public and available to anyone, so you might think, well, then where's the edge for me, right? I mean, anyone can look at this data, but it's really in how you analyze it and how you make it legible to others. And there's still so much to be gained in that regard.
Very interesting. And Vanessa, from your perspective as an investor, how do you see the benefit and the value of data and data analytics?
So we invest in early stage companies, so we don't trade, but we do invest in these types of companies. And I don't know how close you are to the blockchain data, but it's very hard to read. So you need these companies to help you read that data. And so we look at several areas. One is data analytics for more financial services. So we invested in a company that works with Cloudflare, which really is trying to give the data in a way that is digestible to traditional financial services firm. And so they're in their comfort zone, kind of. And so we hope that will drive more adoption. We invested in a CRM company that really enriches the client data for NFT projects or traditional companies that are dealing with NFTs, because you have, your clients, but then you have all these wallets and you don't really know what to do with it. But if you look at the history of the wallets, what type of currencies they have, what other NFTs they have, you know a lot about your clients. So we're pretty excited about that. And I would say I saw another project that, the fundamental data that a lot of people receive is through Etherscan. And there are other projects also trying to just get that fundamental data presented differently in a more human readable way, so that you can query the data not through code but really through language. And I think that helps bridge the gap really between traditional players and the crypto native, where we're all coding. I'll give you a last example. If you go to Dune Analytics or these types of platforms, it's really each person setting up by code like a set of data, and that's maybe not that helpful for more traditional players.
That really interesting, and some brilliant examples there. I mean, one of the challenges, of course, and your wallet example is one that I have actually talked to clients about. Is because who knew, right? If you went on to an NFT platform with a wallet full of other people's NFTs, that NFT platform knew what was in your wallet. And do consumers expect that? Do they know about it? Is that a bit creepy? So I think so it brings me to the next point, which is how do you balance privacy and, let's say, non-creepiness with this and with this kind of widespread availability of data. And Shlomi made the point about the FATF and the travel rule and privacy, which has been again something that makes me tear my hair out, frankly, as a practitioner. I mean, Caroline, how do we get the right balance between this massive pool of data that is we've all said is available, and things like GDPR, which tend to militate against that?
Yeah. So, I mean, from our perspective, come back to that analogy of sort of Google Maps. Yeah. We will tell you the sort of the names of the building, the names of the street. We won't tell you who's inside the building, though. We don't have that data about sort of the name of the individual behind the particular transaction. And that's where that role, and that's where sort of the analogy and the sort of the rules have been placing that obligation on those intermediary players, particularly, what we call in the FATF terms, the virtual asset service providers, your brokers, your custodians, your exchanges, and so forth. So that's sort of been one way to sort of start to address those concerns. I think, there's still, a lot of thinking that needs to be done about, I think there's sort of a well understood case that, GDPR and blockchain are difficult to match together, but that's true of GDPR and many sort of systems. And I think we still haven't really gotten to a sort of a happy place in that regard in terms of clarity about how those two things come together. And then perhaps just the last part I'll mention is that we often think about transparency in this sort of very positive stuff. We have all this data, and I can tell you, we just released this week our one of the key sections of our crypto crime report that will be coming out in full in mid-February. And so we know, for example, that, illicit activity in crypto is at an all-time high. So we're just reaching just over $20 billion. And it's also been an increase year on year in terms of a proportion of activity, but we're still sitting at about 0.2% compared to 0.15 last year. That's a level of transparency that we could never get in the traditional financial system. And I think we have to be really careful when we talk to policymakers, decision makers about this, because it can be easy to sort of say, oh, well, look at all the bad things happening. I mean, in TradFi, we're talking about estimates of like 2 to 5%. I mean, that's a huge range. Like, that's not a very helpful number to really deal with. Like, there's a big difference between whether at 2% or 5%. And also, that's also many multiple times of where we're at in crypto. But I think that kind of awareness, and I think in our explanations, in our conversations, we do have to be careful that transparency is not used against us, and we can actually sort of think about it like that is, a feature, and not allow it to become sort of a bug of the system.
No, I totally agree, and I agree with your hypothesis on privacy and blockchain have been unhappy bedfellows for a while. We did a paper back in 2017 because I was very frustrated with people talking about it was complete incompatibility, and then we redid it because again there was more nonsense came out in the following year. But it is it's still quite hard because, you know, even, you know, wallet, if you have a way of identifying someone, you know, to your example, then it becomes personal data under GDPR, and that becomes very difficult. I mean, Neha, I'm interested in your views as the director of the Digital Currency Initiative. I'm guessing, you know, one of the big things that you're thinking about is privacy and you know, as part of a kind of, you know, as a digital currency. And I think it's a very, you know, the European Commission have talked about it in the context of the, you know, the digital euro and lots of policy. Apart from China, you know, everybody else has said that if they're going to do a state-backed currency, privacy has to be in there from the start. What's your perspective?
So privacy is obviously incredibly important. The challenge is balancing it with our other social goals, like, you know, preventing criminal activity or preserving market integrity, or even just useful data analytics on what we're trying to do. So we have to address this trade-off head on. And I think there are really two approaches. So one approach is taking the existing system as we have it today, maybe tweaking it a little bit, given that the technology we have is a little bit better and offers some, you know, newer features, and sort of trying to go that route. So that would be relying on intermediaries, relying on custodians, on exchanges, on virtual asset providers, to know who the customers are, and sort of assuming that everything kind of goes through a similar structure to what we have with financial payments today. Now, I think that might be a good short-term route. We should definitely explore that route. However, I think we also have to acknowledge that AML and CFT are hugely inefficient systems as they exist today. They rely on these intermediaries having massive amounts of data about individuals, and, you know, it kind of remains to be seen how they're going to monetize and use that data. And I really think that this technology gives us the opportunity to do some blue sky thinking, and it's much harder, it's much more difficult, it's much more sort of groundbreaking and might be, you know, more challenging to do. But at the same time, we have the ability to bake into the base layer privacy. We know how to do that. There's still, don't get me wrong, there's still challenges, but we know how to bake in privacy at the base layer in this new paradigm, which is not how the old paradigm worked at all. And we know how to do things like self-custody of digital assets in this new paradigm. And so I do think we have to think, you know, we have to think creatively about how we can achieve our social goals on top of a system that maybe bakes in privacy as a first order primitive. I think it's possible. I just think it's going to require quite a bit of effort, but I think it's the right way forward in the long run.
It's very interesting. Elodie, any thoughts on how you balance privacy and the use of data?
I think it's definitely, you know, it's not easy. I would just want to take just a second to pause here and make sure we all have this like top of mind today, because when we talk about CBDC and what's happening and the decisions that are being made today by the regulatory bodies are extremely important. And if we look at, you know, China is one way to look at how all the information is being treated by the government, and the financial information is being, you know, used to control your behavior. That's, you know, one way that when you're in democracy, you don't want to go. And I think today, like when we talk about how do you leverage this data, and basically, you know, do you want to track everything from start to finish, or do you want only to be on the receiving part, or only on the, you know, there is no, maybe we don't need to have all the pieces of the equation. I think, as you said, you know, Neha, like we have technology today to do that. I think it's really important that we all recognize today that the technology here is very neutral, right? It's not a good or a bad thing. It's what we're going to be doing with it. And I'm not sure everyone is having those conversations. Like today, our governments are deciding what will be done with our data and how CBDCs potentially can use this data to control behavior. And as you know, once in the blockchain, it's immutable and it's for life. So I think there is also a really important thing to keep in mind today is that this could be exceptional. This would be great. We could fight, you know, fraud, and this could be used in a very good way. But this could also be in a way that could, you know, give some of the centralized entities that are in charge also more control and more ways to do that. So I think there is this this debate that's happening at this time. I'm not sure everyone is aware, but I think we should be to defend that and ensure that there are some other ways. You know, I touched earlier around the integrity of the market, around the fact that we need to have a fit and proper market to avoid wash tradings. This is one fit to look at a macro front to ensure it's a safe place to connect and exchange. I do think there are other ways to do that. I just want to ensure that everyone in this room realizes that we're today in this very important phase where internet was at some point. Wonder how do you deal with information? And we're in the same place today around financial information that will basically enable or not a centralized entity to make decision. So I just wanted to highlight that and ensure that there are other ways, and we need to ensure that we're all aware that we're heading in that direction as a democracy.
Yeah, no, absolutely. It's a really, really important point. Vanessa, have you got any thoughts on this? When you spoke to your NFT provider, did you say this is a bit creepy, or did you say no, guys, just go for it?
I think most companies want to have that enriched data and want to have like enhanced client experience, and they see Web3 as another way to interact with the clients. Nothing to do with privacy, because they already have they're already their clients, they already have their other data, etc. But it gives another level of interaction. Whether they will use that and monetize that with advertising, etc., it's up to them. But I think at the same time, if you have a wallet and you disclose your email or you disclose your phone and it's associated to that, then you know what's coming. So I'm less worried about that. I'm more worried about really cold outreach where there's no relationship. I receive so many random NFTs in my wallet that only has one NFT. And so, I have to go through loops to make sure that no one knows my address, etc. And I'm very careful with that, but I think people who are not crypto native, might spread their information a little bit wider. The other thing, which is really important for privacy, and I'm not going to say privacy, I would say confidentiality of information and mostly trading information, is that no large institution will come at scale without maintaining confidentiality of their trading secrets, their algorithms, the way their trading patterns, and they already have that in the current world. So why would they give that up in the blockchain world? That seems absurd. And I think there are new technologies coming in, like ZKs, etc., which really will be the next step forward towards adoption. But I think all the privacy coins, etc., have given a bad rap to what privacy means in the financial world.
Yeah, I think all great points actually, and I think what we're all saying is that there are massive benefits to all of this, as you say, user experience, better data analytics, but we need to be transparent, from a societal point of view and from an individual point of view, and again, as talked about in the last couple of panels, we need education, right? And I think people need to understand this. Just shifting gear, but so we've talked a lot about the fact that there is a lot of data, and we've talked about some of the concerns around privacy, but how can data analytics be used for other cases, not just the stuff that Elodie and Caroline use in their organizations, but things like improving risk management, fraud management, identity management, and investing, and doing things better. What does everybody think? Vanessa, do you want to kick off with that one maybe?
Yeah, when I invest in existing projects, we look at the data of the project. If the project is live, we look at the testnet, we look at the results, and everything is available online, right? So that's really great for us. We're looking at other use cases where we see a link with real world data, which I think is pretty exciting. So, everyone knows Helium, but we invested in my previous company in a company called Demo, which allows you as a driver to monetize your auto data. And that's huge, right? And it's monetizing the data of the battery, but also, and it's for electric cars, but also the data of the behavior of the driver. So instead of having all the companies manage that data, you actually resell that data as the owner of the car. And I think we'll see more and more of that, as data is not only the fuel for financial services, but for a lot of other industries, and has a lot of adjacent, use cases for insurance, for producers, etc.
Yeah, really interesting. Elodie, what's your take on this and how you use data?
I think, I brush into it, but you talked about risk management. And I think that's something we should, I know we want to break with traditional finance in some ways, but there are some things that are done well in traditional finance that we should learn from as well. And from a risk management point of view, when you're an investor, there are some classic ratios that you look at. One of them is, for example, value at risk, implied volatility. You want to look at some of the liquidity metrics on the different areas. And this is something that we think is key as you want to tackle this new market, to basically enter it in a way that you have you have as much data points and visibility as possible. So I would say traditional finance ratios, but applied to crypto, which means you have to take that into consideration. You cannot just copy and paste. You need to work with experts and professionals to support you in that area.
Great. Neha?
Yeah, something maybe that is a little bit outside the box is it's related to risk, but it's actually using the public data available not only on chain, but on the peer-to-peer networks to monitor for network security. So that's something that we've done a little bit of at MIT. So we can monitor traffic and observe the types of transactions that are happening. We can look for double spends. We've actually done some work where we've gone into mining pools to see what they're mining on, to be able to detect attacks at that level. So we call it consensus risk, or risk of the underlying security of the network. But you can do some work there to determine the overall health of the network as well. And that can be very valuable, you know, when there are thousands upon thousands of different chains out there and different networks, and possibly predicting and maybe even eventually preventing attacks.
Caroline?
So one of the things I think is really, you mentioned identity management, and I think there's been some very interesting studies and sort of practical trials, in particular around the KYC issue. So, you know, the fact that we've got all these banks and other institutions who all do KYC, and then I go to a different bank and then I have to re-KYC all over again. And this is like ongoing process. It's not very efficient, and it doesn't, no one has the most up-to-date data, and so on and so forth. And I think what's interesting about some of the trials we've seen in this space is that we've been able to see, like, in terms of improving outcomes, improving quality of information, like these, you know, and these are using blockchain-based systems, like this does get you to a better place. And this comes back to the point Neha makes in terms of, like, we shouldn't just be copy and pasting the old system, because like we can do so much better. Like, how effective has AML KYC been to date? Can we do it better? And I think we've shown we can do it better, but despite, you know, the outcomes of those trials, it's not being implemented in practice. And there's a whole lot of sort of commercial and, you know, contextual reasons why that's not happening. And I think trying to get the incentives right to help people make that shift so that we can get better quality data, we can get to better quality outcomes, better user experiences. It's going to require people who don't necessarily have that vested interest, so people like governments, for example, to really kind of weigh in and put those incentives, the carrots and sticks in place to get people moving towards that space.
Of course, the challenge with governments is they move very slowly.
They do.
You know, I mean, just thinking about, you know, identity management, you know, just looking at it from a UK perspective, you know, the UK government had a solution and data 7 years ago. And, you know, the financial services sector has been trying to get that data to do something, and still not happened, right? I mean, it seems completely bonkers to me, but, you know, and I think I totally agree with you, but it's, you know, if we...
Yes, a hard road.
Challenging. So what do the panel think other use cases for data analytics might be, you know, and what do you see as the most interesting use cases for you going forward? Caroline, do you want to pick that up first?
Yeah, look, I think in terms of where the market is today, some of the most interesting things are really around the areas of sort of financial stability, understanding relationships between crypto and TradFi and crypto and the real economy. I think another area is around that Elodie's picked up around sort of market integrity, so understanding market manipulation. The consumer protection space, I think, you know, thinking about what data is available in terms of, you know, on-chain activity and who has exposure to that, I think is very, very interesting. And I think these are all things which are part of the solution to this almost sort of crisis point that we find ourselves in the industry. We've had some really big events which affected huge numbers of people. We still haven't seen a lot of, you know, we've seen isolated instances where regulation has moved forward, and obviously MiCA is a big part of that, but there are significant markets where, you know, nothing is happening or nothing at any kind of pace. But that's also an opportunity for industry to sort of step up and say, you know, this is what good practice looks like, and this is what we're committing to do, and use the tools that they have to kind of set the pathway so that when sort of the regulation comes along, there is this kind of very clear way, and I think it was mentioned by Levan, and it's not about just talking about, I don't like that. Okay, well, now show, you have this opportunity now to show what we can do better, and there is so much we can do. And I think, thinking about data in that way is beyond just AML, CFT, into these other kind of things which is top of mind for sort of the political and sort of regulator community is really where we need to go next.
So you would see it as, to use the title, key to the growth of the ecosystem then?
Absolutely. We need, there is almost a sort of a crisis of trust, and really rebuilding that is going to require data. And I think, there's a lot of opportunity which is untapped so far in that regard.
Great. Thank you. Vanessa?
I like the usage of data in the adoption of NFTs and the financialization of NFTs. So we've seen a pendulum swing towards, a lot of trading, speculation in NFTs. It will come back. Don't worry. And right now we see a lot of people building the tools for that, so that you can lend your NFTs in a pooled way. You can create derivatives around it, etc. There's a few platforms that do that. And I think that's going to be super exciting and interesting to see how that builds in the future.
Great. Thank you. Elodie?
Yes, I think I will just add to, the answers that you already gave that I think was quite interesting. Definitely we're in a place we want to build. We need to restore that credibility, that trust that we lost in the process. I do think that we need to go back to the basics, in blockchain itself, and to leverage blockchain for the transparency and all the underlying aspects or proprietaries that the blockchain has. And that, for example, could be through a proof of reserves, for example. Let's go back to the basics, but we can maybe do a combination of, the centralized players. Right now we're in a very fragmented place. So to get all this data, not only do you need to extract it, but then you need to make sense of it as a whole. And so we can maybe use a combination of what's, CeFi and DeFi have to bring together to have all these tools and to, restore that trust and credibility, and to have all these KPIs, as you pointed out, to have all of this dashboard in a way to be able to make best decisions with having awareness of that ecosystem.
Do you think we would get, I totally agree. So what we're saying is there's lots of data. You need very clever data analytics software and people to make sense of it. Your Google Maps thing that we're all going to steal from now. But do you think we would have agreement on, let's just use your example of proof of reserves as to what that meant? Because that's the challenge, isn't it? Because you've got the technology, you've got the data, but if we all have a different view on what, whether there are sufficient proofs of reserves, and that brings up other arguments, I guess, right?
What do you mean? I'm not sure I understand your question.
So I'm just wondering about, it's the challenge then. Well, it's more of a kind of, I suppose, regulatory question in a way, but I might say that seems fine from a proof of reserves point of view, because you've got X% or whatever, and you might say, no, I need double that, and Neha might say, no, triple that. I suppose that's going to be the challenge, isn't it? It's interpreting the data is.
But I guess then that's a good conversation to have,
Yeah.
But at least you to have this overview.
At least we have the data, yeah.
Exactly. And it's totally having the data, right? Is to have it in a consolidated way that you have a holistic view of the market. I think that's something that's challenging today. Is if you don't know how to work with blockchain, you can have the centralized exchange view, and so you'll have liquidity only in a percentage of what's actually happening in the market. So you need to have this consolidated view to be able to make those decisions and have those conversations and run that through your traditional, risk models and strategy. But if you don't have this consolidated view on the market where you're comparing apple to apple, it's impossible to even have those thoughts.
Yeah. Understood. Neha.
Yeah, these were all really good answers. I guess something, I'm trying to think of something else. Something that I've been seeing happening lately that I'm quite excited about is the use of data in journalism, I guess. So basically, it's kind of relates to transparency of these systems and these markets and holding actors accountable. But we've just seen so many people who have gone and dived deep and traced trade flows or looked at capitalization or, derived really interesting insights in a very almost citizen journalist way because they have access to these data sources. So that's been really exciting to see.
Yeah, it's a really great point, actually, and it's you see that happening more and more. So we have got 5 minutes. Does anyone have any burning questions? Gosh, 2 questions. Sorry, the gentleman at the back was slightly earlier. Apologies.
Thanks for calling me a gentleman. I always like that. Just picking up on your point, because I wanted to ask a bit about that. Are there use cases for non-personally identifiable commercial information on these blockchains to sort of monitor markets? And because if I remember correctly, GDPR information on companies, right? So monitoring movement of goods and services, and is that a good thing for market participants or potentially not?
Sorry, who was that to? Which?
Oh, I think Nia was
Nia.
pointing in that
Okay.
direction.
Oh, I think everyone touched on that. I'll start with it, but I mean, I think personally, transparency is a good thing, but I know, but transparency can get kind of tricky with financial markets as well. So I think that this is something that, as an industry, we're going to have to deal with because it's unprecedented levels of transparency. And I think I came to this initially very idealistic, sort of coming from a very certain perspective of, information wants to be free, everything should be open, we should see it all out there. Everyone should have access to the same level of information. And then slowly, as I started to understand a little bit more about financial stability, I realized that sometimes that's actually a little bit dangerous. It doesn't mean that I don't think information should be free, but I think we have to develop the right tools and communication and messaging around that. But I'm really curious to hear what others have to say about that.
That's a great point.
Yeah, look, I think there is some sort of growing different use cases, whether you're an investor, which has already been mentioned, whether you're a regulator who might be, or sort of, I sort of think about policymakers, you sort of got the central bank side who are kind of really that macro view of interlinkages between different markets and how stable, not just crypto is in and of itself and its interlinkages between different firms within the sort of digital asset space, but then between digital assets and traditional finance and the real economy and things. So I think that level of sort of what I sort of think about as trend level data, I think, and you can slice that data geographically, you can slice it by particular sector, for example, and I think there is really a growing demand for that sort of data, and it's something which you can do without touching on any of the sort of privacy concerns.
No, you don't want to? No. Okay. Anybody else with an answer to, since we have a couple of minutes?
I think right now we have too much data and we don't know how to read it and it's all over the place. And some people who know what they're doing will be able to monetize it on it. And, whether it's a product or is it for proprietary reasons, that's the name of the game, but that's also the name of the game in traditional finance and others. So it's nothing new here. I think what's new here is like, what is this data, right? What is it helpful or not? Is it real time? Is it, data monitoring? As we mentioned, we also invested in a company that does pre and post trade monitoring and can actually prevent, hacks almost live. So it's really about being the specialist in what you do and trying to make sense of that data. But for me right now, it's still very hard to maneuver.
Yeah, Elodie?
Yeah, I would just add to that is, so what we do is data. We collect, 1,000 billion points of data, every year. And what we're saying is basically, as we grow and that the ecosystem grow, you need more and more intelligence. So you need more way to interpret this data. And that's why we went, we started to have like a lot of aggregated view with a lot of raw data for all centralized exchanges. And then we added, risk management, benchmark rates and indices, and then more research product that enable you to best navigate the market. And I think as we go, we'll need to head in that direction to basically know and how to make sense of this data, and then to have those conversations around like, what does it mean for you if you're a company, and if you're an individual, then it's a different story, it's the government. But I think all of this conversation will be really important as we continue to grow in the ecosystem.
That's a great question, thank you. And I thought Niha's point was a really good one. I've been heavily involved with the concept of open banking and open finance, but of course that doesn't mean, I don't think any of us in this room would really want each other to be able to see what's in our bank accounts, right? But we do want trusted third parties to be able to access it. So it's just working that out and balancing with privacy. Anyway, thank you very much everyone for attending, and I'd just like to thank Caroline, Vanessa, Elodie and Niha. Thank you for the panel, and thank you for listening.
Thank you.
Thank you.
Thank you.